Russia has refused to accept the same terms as Ukraine's private sector creditors, who've agreed to write down a chunk of the government's outstanding €16 billion owed to them. War-torn Ukraine has been struggling to satisfy the conditions of an International Monetary Fund bailout, which requires it to secure relief on its mounting debt. 20% of debt obligations of the country have been written off by our creditors, around €3.6 billion. And over the next 4 years, Ukraine will not pay off any of the principal loans. The announcement comes as Ukraine's economy continues its slow recovery after appearing sunk last winter. The deal should give the country some breathing space.
This kind of reduction of the obligations of Ukraine to pay back the debts is very important, because then we see that actually there is more opportunity inside the country to stabilize the macroeconomic situation, to have more funds for development of the economy, more opportunities to give actually positive signals to the foreign business community, to foreign investors.
But what would have really helped Ukraine is for Russia to have accepted the same terms as the private creditors. The Kremlin has flat refused, insisting that it's sticking to its end-of-year deadline for Ukraine to pay it back the €2.6 billion that will be due. Since the two countries are clashing over the conflict in eastern Ukraine, that's not really surprising. Nevertheless, the deal has at least brought embattled Kiev some temporary relief. Our correspondent says that part of the savings will allow the government to increase the minimum wage and pensions. The country's finances have been further hit by its currency, which has depreciated drastically over the past year.
Euronews, Kyiv.